It's August 8, 2014. Current time is MT. Jay Meisel here with the daily Forex trading outlook. Here we are on a Friday. I expected a bunker mentality Friday, and this is what we've gotten. If you look at the charts, at least in the euro dollar, for example, it's recovered above by a few pips the levels where Draghi uttered his verbal intervention yesterday. And under other circumstances, euro would be trading with a 132 handle today and not pressing towards 134, having tested just above it. So this is what we have on a Friday. If you look at the bond market, it's frightening actually, but it shows a lot of fear. U.S. Treasuries have busted through that 244 level into the 230s handle now, and that is not really a sign of an economy looking to boom, which the market has been assuming it's going to an acceleration mode. So for now, we have fear is dominating, geopolitics is dominating. It's a group of influences, and on this Friday, it's hard to see new speculative bets being made and positions being added to. So what we're seeing are liquidations, people running for cover. Take a look later on, and in that regard, the euro has benefited by due to the heavy short positions, and dollar yen has been the lead, and that's busted through the 102 level, but would have to really get through 101 to make a real true squeeze going on. So far 101.50 is held. 50 level remains pivotal in just about every currency. As far as euro dollar goes, it's 134 is the key level. If you look at the charts, a reversion to mean would be back to the 20-day moving average, which is 134.65. But for that to happen, you'd have to get to 134.45. It's probably where the level that you'll see a lot of stops. So it would need a lot of work to get up to this 134.45 level we've been talking about for some time. If you look at the 200 of the 100 period 4-hour moving average, which I've been speaking of as a momentum indicator, that comes in at 134.37. So we've that's your key levels. I mean, that's at 134.45 and 134.75 to 83 on top. On the downside, there are no stops probably until 133.33, which is this week's low. So really the key, I would say, for today is to look at the one. If 134 becomes support, then the market will try to squeeze higher at least, and get into that 134.45 region where there's probably a lot of stops. If you look at the 1 hour chart, we busted the trend line here at 133.86. We've also gotten above the 100 and 200 period moving averages. So really, it's one of those Fridays, Friday where if there are any stops to run, the market will go after them. So that puts the risk on the euro dollar upside. The only reason to buy euro is because the market is heavily short. No other reasons that I can see where you'd be running into that reason. But we get into these liquidating markets. We've seen it before. And you just have to be aware on a Friday. So there'll probably be bids on dips, I would imagine, above the pivot levels 133.65 today. So you probably have to at least stay above that to keep a bid under here. But the market will only work harder if it can get through stops. So that's your bunker mentality Friday. One thing, by the way, if you look at the bottom here, we have a special offer. It's a gift card. Just click on it, see the details. It's a no obligation offer. All you have to do is click. There's a limited number of quantity here. So if you want to take advantage of it, take a look. Otherwise, good luck, good trading. Just be cautious today. I think you'll see people heading to the bunkers early. And as I said, much depends on whether there'll be stops.